guys, this trade happened on Monday, meaning this week I opened the week with a break-even trade. Let's do a quick recap to see how I executed it, the thought process behind its execution. So if you go to the charts and perform a quick top-down analysis, you notice that here on the Monday, this was on Monday where our trade was happening. The previous day, that was on Friday, it had crossed strong bearish momentum, so we expected the bears to persist for a little longer. Furthermore, if you go to the dollar index from a weekly time frame, you notice that the previous week closed with a very strong dollar index. You see this dollar index for last week, it closed very strong, so you expected the momentum to continue, implying we expected AUD/USD to sell. I was aware of that risk which was carried in this trade. So let's see the conviction that I got from a H1 time frame to execute this trade. If we draw a quick path here, you notice that the market was buying, and then here it came change character, and then we are expecting, of course, to retest from that zone and continue buying. So what did I do? The key point of interest in this retest was two key zones. The first was this fair value gap, the gap between this blue and this red candle, and then we had that order block which was there below. So if I were to mark my area, I would mark it like that. We had that order block and the fair value gap, so we expected the market to react from this point. Furthermore, I was convinced this order block is a valid order block because it met all the three characteristics of a valid order block. Number one, a valid order block leads to either a change of character or market structure, or a BOS. So here you see there was a change of character after it broke this high. So the second characteristics of a valid order block is that it must move with momentum, leaving a significant fair value gap. You see the market moved with a strong momentum, leaving this fair value gap. The third characteristic is that a valid order block must sweep liquidity, which was ultimately attained at this point. So if we were convinced up to that point, and then we go to a lower time frame such as the H1 to look for M15 here I obtained my entry. Let's see how the odds played out so that we could execute this trade. So here in the lower time frame I was looking for an indecision candle and a volume candle indicating continuation of the momentum. At first you see this candle here, this green candle, it was the indecision candle indicating there was a fight between the bears and bulls. So I was just waiting for a bulls momentum candle, a engulfing candle, to confirm the bulls have gained control. So let's play the candles. This is M15. See, at this point this candle happened and it engulfed this one, so I was sure the bulls have gained control. So what did I do? I came and entered there immediately the next candle with a stop loss of 10 pips, and of course targeting 30 pips. That is 1:3. 30 pips were up to there. So what happened next? The candle played up to our direction and then it played for a bit. You see, let's see how it almost removed us. All this point I was holding, you see, it almost came to a stop loss but didn't hit it. Eventually it reversed. I don't know what kind of news was happening there. After reversing, now this one was almost midnight. Let's see how we managed to break even. After reversing, the candles came, continued buying like that up to our point of interest, up to our break even. You see, in my plan, once a trade attains 1:2 or 3/4 of the trade, I move the stop loss to break even. So the moment this market hit point this the 3/4 of the trade, I moved my stop loss to the break even. So up to that point I was risk free, and that's when the market reversed aggressively, moving us at a zero. So that was a thought process between that trade. So guys, till next time, bella ciao.